Hello guys, welcome to Traders Therapy Session. I'm your host KRO. Welcome to Market Maker by Model Part 2. Before watching this video, please I plead with you, make sure that you watched Part 1 where I explained everything here. This might seem like a zoo for you, but each and every line that you see right here, I promise you. Let me just do this. Each and every line that you see right here has been annotated, and has been, each and every word that you see here has been talked about. So guys, without wasting any time, I requested you to go and annotate those videos, take a screenshot. If you haven't done so, please take a screenshot right now and annotate these moves if you have watched the video. Plus it will add as an experience for you before I go into lower time frame. Remember, I mentioned that I will keep on editing this, guys. Sorry for that. Remember, I mentioned that I will go to a lower time frame and try to focus on the entries, on how we could have got the entries here going forward into this being our final TP and everything else. And I mentioned about this engineered buy side liquidity, how we are going to deal with. And I have realized as I was watching the videos, some of the words I have messed up there. Please forgive me, hence I did not have a script to read while interpreting. I might do the same here, but please try to follow the logic. With that being said, guys, let's move on. I would want you to, I'm not going to erase everything, hence, since it is going to be our reference. Remember the focus, however, I want you to focus on this. Remember, your focus was on the draw on liquidity being the sell side, relative equal lows, and this being an excuse. This was a first fair value gap, but we favored this battle and this gap right here. And I forgot to mention that if, guys, we are going to have, as you can see, this is some sort of a breaker. If we're going to have a retest of this breaker, or we treat it as a head and shoulder, you see this one, even though it's a balanced price range, I know I mentioned that, but this, for me, it would be beautiful to be again a head and shoulder liquidity to the retail traders. You might see a head and shoulder in the liquidity, because I guess I saw another broker where they've tested this, but I guess this might be the point of interest in future. We don't know about that. So let's focus here on how we could have utilized the buys. And like I mentioned, guys, this side is difficult to trade if you are starting, but this is the easiest. This is chop. I don't know what that means. From here, I will go to 4-hourly time frame and see what I had. And I will also, okay, this is part of it. Smart money divergence. So guys, like I mentioned before, we see on a 4-hourly, this is a point of interest. And this, according to our higher time frame, the market had to break this high first. Remember, first engineered liquidity. This is the reason why you could have got your entry here, right here, as we interrogate the lower time frame. But our point of interest is here, how we could have got this. And if this is a breaker, guys, this is called advanced breaker entry. So we're trying to see that. Let's go to 60 minutes. Our main focus, let's bring this back. Remember, our main focus is to get the entry here. And don't be surprised if we get another smart money reverse, smart money market maker model here. So, and we are going to incorporate time as well. We had the price respecting this low during lunch on Thursday, the 26th of October. Then look what we have right here. We have this. right there as a fair value gap or a volume imbalance. As you can see, there's a wick there. Then the price came into it. We're going to look at the time. Then we see after lunch PM session on Friday. Then we see price coming into this. And then this was the first ever entry for this impulse. I wouldn't say go to this. This for me, plus it's an hourly time frame, it's high probable. So this was the higher time frame for you to enter. So we're going to focus on this, how we could have even utilized even further this, and see what we have right here. From Thursday to Friday, we have this. So let's start to see, before we even go even to the lower time frame, let's focus on the points that we have here. We say daily fair value gap, higher time frame, PDRA. We are in it. Number one, wait for smart money divergence. Smart money reversal. We wait to take the highs. And then 2022 model, whatever that we have that has to be played. We have the high being taken out. If you go to the lower time frame, you can see this is the model I like to call the afternoon model though. I'll have this. Sorry for taking time, just for explanation purposes. I'm not going to draw those zigzag going down. I'll have this. This is an afternoon model. First time when I started learning ICT, when he was trading on 2022 model, guys, when he was trading PM session, go look for this model. I didn't have the name, but it is the power of 3. But I call this one afternoon model because it occurs mainly on afternoon sessions. What is happening here? I just don't want to minimize this chart for the sake of this presentation. So forgive me for taking time here. And plus the drawings. Okay. What will happen in a schematic view? On the afternoon, there's a low that was being taken, which is this low. Then the market will consolidate. During AM session, it won't give you anything. And then the effect of news might occur here because of this. You might not have your trade on AM session. You still have to wait for another session, of which is afternoon session. Then this is your AM trade. Then afternoon, during lunch time, market comes. Afternoon, it comes into that PDRA, of which you can utilize this as a higher time frame and go to the lower time frame, hunt your entries here. So from here, what are we going to do? Let us look for smart money divergence, which is number 1. I will go to, this is Nasdaq. I will go to the next one, which is S&P. Thursday. Okay. I don't know how to go back. I first need to do this. Let's come here first. And annotate this. We have a lower low. On Thursday. Let's make this thing black. We have a lower low on Thursday. But on Friday, we had a higher low. Focus. To some of you, if you are new, you are going to miss this one. Focus. This is smart money divergence. I don't have an access to the next part. I can only show you the 2 screens, and then I do not want to remove this thing because for presentation purposes. But just focus. I'm just going to make sense now. Guys, we have these 2 points right here. we have these 2 points right here, the low and the high. The low and the high. We focus on the low. The first one is the low. The second one is the high. So the first one is the mitigation, like head and shoulder, like inverted head and shoulder, like the low, the high. Let's go to the next one. Same hourly time frame. We have lower low. This is even enough. We don't have to go to another one. Plus, what do we have here? Lower low. I do not want to talk about the intermediate low and everything, because even the retail traders, I guess they should be interested in this one and see, maybe and only maybe, see if they can even study further. A higher time frame point of interest, PDRA. We have, remember that we had what? Sorry, let's come here. Thursday, Friday. Thursday, Friday. Here we had a lower low and we had a lower low. But there, what did we have? What did we have? We had a lower low on Thursday. On Nasdaq, we had a lower low on Thursday. On Thursday, we had a lower low. On Friday, we had a lower high. So this is divergent. Let me go back to the chart. And then this is not a chart. So Thursday, lower low. Friday, higher low. So it went high, but on S&P 500 it went low. So let's move, guys. This could have been your entry. There's no any better entry than this one. This could have been your entry. And remember, you enter on which one? You enter on the one that did not take the low, because it's likely to spool higher faster than the other one. Then this could have been your entry. Forgive me, guys. Let's just break the rules of the bot. This is just to appetize those. I so wish I had this idea at this time, because I just had the understanding and the crack now. And from backtesting these things, guys, this is the low. You trust that the market will never take this low. 750 ticks. Till the real TP. Remember, you had the real TP. And plus the scales in. Guys, if you had annotated that thing correctly, the way that we saw it from the previous video, this could have been your target. You know what we are talking about. If you are new, please go back to that video. We are not trying to sell any course. We are not trying to sell you anything here. We are just selling you the idea and see if it's not working. See if what we just talked about is not how it is. Then this could have been 1:33. Plus the scales ins. Guys, this is how the market moves. I don't know what to say. Plus you could have got your scales ins there. Scale ins there. This is basically how the market moves, guys. Then let me not fail you guys and continue. Try to focus on the money part. This is not about the money. Remember, we are not even encouraging anyone to utilize their money to do this. Then you wait for SMC reversal. Okay, smart money reversal. This is what you got, smart money reversal. You can even wait for this high if you annotate, utilizing the side to be taken out right here. Then you could have got your entry. I don't know how, but this for me is enough, guys. After seeing this low, after coming here, coming into this, seeing number one occurring, smart money divergence here, for me, I will utilize this high. I will take this as a mitigation instead of a breaker. The low plus this. So 2022 model, that would be it. I would like to go to 15 minutes. I won't go to re-entry and whatever that you might, but we might even revisit it. Let's not even use the chances. 15 minutes. You wouldn't want to enter on an 1 hour on an hourly time frame. Guys, I just see this now with you right now. Please forgive me. I would have seen it before, taken a screenshot and put it on the PDF, on the presentation there. Guys, that was the gap at the right time in the market. And then you got your entry there. Then you got your stop loss. Your entry become modified. Plus, you have an invasion fair value gap right here. Plus, you have a fair value gap right here. Let's go to 5. Guys, I'm not going to explain. I'm not teaching the entry models. I'm not teaching the models. I'm just sharing with you market maker model here. There are videos for such things, and I'll still do. Please, if you like this thing, follow the 2022 bus driver model right there. I still have 8 videos, and then I'm still caught up, but I will finish, make sure that I finish. Now that we know everything there from back there, we're not going to go there. Now we're going to focus here. Let's see if 5 minutes, and we're not going to go any lower time frame than this one right here. This should be the lower time frame that we would use. If you don't see the entry here, just take that for this video, saying that there will be another entry. There was an entry there, or you can look at it yourself. So we respected that low plus divergence. This could have been an entry. How? It's a question. I can see we have relative equal highs. Okay, here we have a low. We have an evidence here going back, coming back, but it didn't come back the way, because the market closed here, I guess. Yes, the market, this was a Sunday, so you could have caught, and even the weekend, your trade could have been on a weekend, because there was a Friday. You could have caught your intro on Friday on a weekend. I don't like to put it on a weekend, to have a trade to go on a weekend. Then let's see Monday. What Monday brings for us. Monday morning, we just trying to look at the easiest entry, guys. We are not teaching anything, and or we are not focusing on anything. High time frame might have a better entry. The aim is just to go into this and try to share the idea of what we have right here. Here I can see there's a 9, there's a liquidity taken. This was Tuesday. This is Tuesday 1. Tuesday London session. Then we will utilize that entry. Silver bullet. The London was taken. It was taken. Displacement. This is easy to spot. Remember, we're using time as well. Guys, if you want to spot this, guys, 2022 bus driver model or ICT 2022 model. Up to 2023 bus driver model, not 2022, excuse me, and then IC2 2022 model. This is where he's treating this. And if you go to my technical advanced course there, I teach this, which I call candlestick anatomy, where I don't have to go to the lower time frame to tell you that this is a breaker, guys. This is a low, this is a lower low, break, came back, fair value gap right here. Let's see the timing. The timing was 10:40. Then that was the entry. Stop loss below. Then this one. This was the entry on the entry of this model. Was supposed to be on Tuesday, the 31st of October, 2023. This was supposed to be the entry of the model that you see on a daily, on a 5 minute, 10:40. This, if you were on a trade buy, this was supposed to be your entry. But I do have some certain entries, but I didn't see it the way that I see it now. I had certain entries that I took here, and I don't know, trade of 8 does the things here. Sometimes it brings them, sometimes it doesn't bring them. Let me try to see if I was part of this model trade. So I guess it doesn't bring any trade, but I participated on the buys and the sells there. Let me see, maybe I didn't log in. Trade of 8 logged in. Okay, it doesn't matter. But certain trades I participated, but not in that manner, seeing the market maker model the way that I'm showing you. If I did show it that way, guys, because I was busy trying to study it during the week, so I couldn't see it that way until now. So if I saw that way, this could have been the entry according to the backtest and everything, and leave the market goes until last week's Friday. Because everything else from there, that was the initial part. Tuesday the 31st here, this was the initial part. Market never came, so this is where we are going to put these things in. This thing's supposed to be here. Remember, I mentioned, and if you watch the previous video, because there are people whom I've even requested to go to the previous video, but they didn't want to go to. So they will see this video as a boring, only to find out this is a continuation. We just didn't want to waste a lot of time because it's 52 minutes, the previous one. This occurred here. Remember, I requested you, I asked you not to rush as the market is coming here, not to rush to come in until you see certain things. This entry is supposed to be here with that, and after this, market never ever came into this area. If you can see, it never ever came into this area until it reached the TP. Even the pullbacks that you see, the second entry right here as a pullback. And if you understand this model, so you won't be caught up here, you will get this sell. This doesn't mean that you don't have to sell. You see afternoon trade right here, it's a pullback. You could have got this sell right here, but closest hanging fruit, get this sell. I guess I entered this sell right here. When was this? Thursday the 9th. I entered this sell right here. I got this sell right here. I entered this sell. I went out here. It even went further. It came here, went further, but I went out here. It was fine by me. It was good. It was okay. So, but I didn't. I also want to emphasize this. I didn't know what was happening on the market. I was just following the 2022 model. I was just following the 2023 model, the liquidity and everything. But, guys, this is what I'm trying to show you. This is what was behind the scene. Then on Friday, this is where I lost on Friday because I was confused whether the market would go down or up. Then this is a revelation, guys, why I should have let the market did what it was supposed to do. Because on Friday, this is Friday, right? On Friday the 10th. On Friday, I'm going to focus only on this. We had a liquidity taken. This is not the time to trade. This is the reason why you would see such things happening. 9:30. I guess it's this one. 9:30 seeing a Judas swing. During the right time of trading, here's 10:35 right here. I'm not teaching the models, guys. I'm just pointing out. But if you know, guys, you know. This is what we'll be teaching. This is a continuation model. Continuing up. Seeing an order block and a fair value gap at the discounted area right here. Below 50%. Because we have two fair value gaps. One fair value gap. Second fair value gap right here. With an order block. This one being respected. Right there. Seeing the body close above the fair value gap right there. Inside the fair value gap. There we have 50%. Below 50%. This is the fair value gap. I don't have other areas of OTE. This as well is an OTE entry right there. AM session targeting the high, going higher. It went even very high. So guys, if you like, if this pains me now. If you knew, like if I only knew this what was happening, I would have caught this trade here. And this needs practice. I'm not saying I'm going to do this inside out. This also needs practice. I need to see this happening. I don't have to rush. I will still continue trading what I trade, but observing this. The consequent encouragement below is what I would like. It's where I like to put my stops. Then my entry based off other block right here. Below, just a little bit below the consequent encouragement there. Then you have like there. Then what would be my target? I know after entering here, the target is the next one, to kick the next one. And it shouldn't come back here. Then there we go. Then the other one. Till it reach my target. Even if I got it here, guys, this is a revelation. Even if I can catch the market maker model later, I can still capitalize using that model right there. If I can get the good entries. But that is not gonna be the case. Remember, the fear will still kick in until it needs experience to do it. So guys, without wasting any time, guys, I'd like to thank you guys for watching this video. Please watch the previous video if you haven't and see where I'm going there. I'm serious here. I might be you might be seeing me being informal, but it's just the continuation part of the previous video. Without wasting any time, guys, see you on the next video. Please, this playlist will be the market maker model series. Make sure that when you watch my videos, if you landed into this video, you focus on the playlist. So I will try to put my videos where they suit. So without wasting any time, guys, see you on the next video, and I would like you to subscribe, to like, and put the notification bell there. And if you want to see me perform more of my understanding of ICT trading, please share this video, bring more people in this community so that I can be held responsible. I know a lot of people will be relying on me seeing this to open them. I'm not saying that you will rely on me on putting your trades. No, I'm not saying that. Just to seeing this the way that I see it. I might be helpful to you, showing you the maybe you might not have understood ICT, trying to explain some certain things. I might be helpful for you to point out such things for you, or for you, and for you to understand and go back to ICT and understand everything that he mentioned there. I'm not trying to be the best. He is the best. He will always be, and because he's the one who funded this, so we are just trying to read the algorithm and take the legacy that he left for us in a positive way, and build and continue doing what he was doing by giving us this thing, and give other people. Without making a lot of speech, guys, share, subscribe, like, and see you on the next video.